Time for the daily scan. It's Thursday, January 30th. One more day left in January. We're going to take a look at the January barometer, see how we're doing there. Stocks trying to claw their way back to the top. So after the scare from DeepSeek from China, technology stocks are still suffering a little bit, Nvidia in particular. I'll take a look at that in a minute. But other stocks and a number of different earnings that came out are actually helping the market try to get back to the highs. But it's not quite there yet. So we'll take a look and see. As always, this is for educational purposes only. I am not a financial advisor, so I am not going to make any recommendations on what to buy or sell or when to buy or sell it. You should do your own due diligence and understand your own trading style. Past performance does not guarantee future results, of course. So let's jump in. First, we'll jump over to the home page, and you can see that today the market bias matrix actually went up a little bit. So we had some bullish signals today on that, and we'll go over and take a look at it, and I'll show you what I mean. So a number of things actually got midterm, medium-term bull signals today. You can see they're all right down here. Most of them are right in the center. A couple of bears over there on the short term as well. But mostly the medium term is the area that started to improve, which actually is the one that was the most red. So if that continues, then everything is going to start to turn green through here. And we may actually get back up to the highs again. So that's what I mean by the market's trying to claw its way back. It's not at the highs yet, but it's trying to get there. So if we look at the S&P, show you what I mean there, right there, make this a little bit bigger. So the S&P right there, trying to get back after that big sell-off on Monday. So all through the week is trying to get back to that high again. We'll take a look at the NASDAQ 100. Same thing. Although, do you recognize that candle now? That's a spinning top doji. Indecision. So maybe that means it's going to reverse tomorrow. Don't know. Apple had some good numbers tonight. It's up a little bit. We'll take a look at Apple in a minute. So maybe that will help the market. But still a lot of work to do for the NASDAQ 100. All right. XLK had been actually not very good. It has both a short-term and a medium-term down signal, and it's not really recovering much. Still isn't even above the 5-day moving average. So just kind of moving sideways right through here. That's not a good look. So according to consolidation theory, when there is a move in either direction and then it consolidates, the next move is usually the same distance in the same direction. So that may put technology down, below the 200-day moving average if that happens. So that's not good. But some of the other ones actually do look pretty good. We'll look at the sectors in a minute. Let's look at SMH. This is semiconductors. And you can see, once again, we'll just extend these lines over. It had been moving in this channel, tried to break out and couldn't. Got back into the channel, and now we're right back in again. Above the 200, but below everything else. So just like technology, it's trying to recover, trying to get back to the mean, but it's struggling to get there, and actually on lower volume today too. So that's not good. We'll keep an eye on that. All of these things there's a number of things in the market right now that concern me. Not saying it's going to crash or go to cash at this point, but there are some things that are concerning. Okay, so let's take a look at we'll take a look at Bitcoin first. Bitcoin, again, trying to get back to that 106, made it to 105.3 today. Actually did go above 106, but it's done that many times before. You can see right through here. So Bitcoin, again, trying to get back through that 106 area. The 10-year, as I mentioned yesterday, I said that it might have been forming a head and shoulders. It looks like that head and shoulders is now executing. And even the candle looks bearish. So it's now below the neckline or the support line. There is a little bit of support right down here, right at the 50-day moving average. So that could delay it a little bit. But if it continues to go lower, down here is where the target is. As I mentioned before, it's right near the 200-day at 4.25% for the 10-year. So that actually might help the market if the 10-year continues to go down. We'll see what happens. TLT. So had somebody ask about TLT. Unfortunately, TLT has not looked very good. If we look at this on a longer term view, you can see that just nothing but down. Looked like it was trying to recover, went down again, trying to recover again. So lower low, lower high, lower low, lower high. That the implication is that it's going to continue to go lower once more. So there's a lot of things it needs to get through: the 50-day, the 200-day, the cloud, all of these things. It's got to make it back up here to make a higher high. So above this level to make a higher high, somewhere up there. That's a long way to go. And let me show you something else that that I discovered. It's actually going to be in my newsletter this weekend, but this is something that I found today. Did not really know this, but 2-month net fund flow for TLT. The most outflows going all the way back to 2005. So that is not a good sign. Everybody is getting out of bonds, long-term bonds. So that usually makes the yield go up. They're selling TLT and they're not buying anything on the anything new that comes to market. And there's a lot of debt that has to be recycled shortly. So that could be an issue, could be a problem. So I would not be getting into TLT. If you are in it, I would probably be looking at a place to get out. And that might be the 50. It might make it through and get to the 200. But let me see what the indicators look like. Yeah, everything is below. You can see this is well below zero, but it's getting back up there. So it might get back above it, but it needs to get through the 50, the 200. It has to get through all of those levels first. And I suspect it's probably going to get rejected right here at about 90 or 91, somewhere in that range. So it looks like it has a little bit of life in it, but maybe not too much. All right, let's look at, let's do the daily routine real quick. So I talked about this yesterday, and I rearranged some things on the charts page. And you can see on the left-hand side down near the bottom, this is the daily routine. So I'm going to go through these. I'm going to use the NASDAQ 100, but you can do it for any of these here. Anybody that's a subscriber, that is. We'll start with the weekly trend analysis, NASDAQ 100, and you can see long-term trend is still positive. Medium-term is as well, but they're trending down, but it is not giving a sell signal yet. So it's still hanging in there. And the uptrend line is right down here at 20,000. So today we ended at 21.5. So 20,000 is really the key. The 50-day too is at 19.5. So somewhere in this range right there. But right now, the long term and the medium term are not giving any signals, bearish, or they're giving indications, some concerns because they're heading down. That's a negative divergence. But it has not gone below like it did back here, right there. That was in 22, just before that long bear market. It went below, the medium term went below first, and the long term later on in March. But that's not happening yet. So we still might have a few more weeks. If it continues going down, there might be a few more weeks before that happens. Keltner channels, big picture first, NASDAQ 100. There's what the big picture looks like. I showed this yesterday. We are in a bearish wedge. These usually resolve to the downside, and you can see the distribution phase. Looks like we're still in that distribution phase right up here. So the breakout is down here at the bottom, and then if it breaks through 22,000, then we're off to the races and heading higher. But right now, it looks to me like a distribution phase. And there's no telling how long that could last. That could continue for weeks or months or whatever, just going sideways before it finally breaks down. Keltner channels, NASDAQ 100, right in the middle. So reversion to the mean. made it up to the 2x level, reversion to the mean there. It's just sitting right in the middle, waiting for something to happen. See the green line is trying to get above the red. So it's trying to make a run back to the top, but not too convincingly. We'll look at the 10-minute, see what the S&P did today. And you can see right here, this is for the week, this vertical blue line is Monday's open. And the market went up and then kind of went down and up sideways, went up again, got a little bit above these previous highs, and then got rejected right at the last 30 minutes of the day. So these are 10-minute bars right here. This volume right here doesn't mean anything. So what happens is market makers will rebalance their books. They usually do that at 3:50 Eastern time. And that means if there's been a lot of selling, then they usually will sell or they will buy. And the opposite, if there's been a lot of buying, they will usually sell. But it does not mean anything. This volume right here with the green bar does not mean it's going to continue going up tomorrow. It's just rebalancing the books for the day. That's all that means. You can see right here, had a negative bar right here with big volume. The next day it went up instead. Same thing, big negative volume right there. And in that case, it went down. Here's big positive volume. In that case, it went up the next day. But you don't know what it's going to do. Right here, you have big positive volume right there. And the next day, of course, was the big crash. So this is normal. Around 3:50 each day, the market makers rebalance their books. But the way things look right now is it's just going sideways heading into Friday. So we'll see what we do. We'll see if we go up, see if Apple might have saved it. Apple right now is up 3.5% after earnings today. We'll take a look at Apple in a minute. Next is sustainability ratio. I don't have the link. All right, well, let's look at cap weighted. Cap weighted looks like it's trying to make a comeback, both for the Qs and for the S&P. So there's the trend. So it needs to get back above that trend. That's for equal weighted. The cap weighted is at the top up here, and it's just going sideways. And cap weighted for the Qs for the NASDAQ is just going sideways as well. And then this is the relative chart, the cap weighted versus equal weighted. The direction tells you which one is outperforming the other. So it's the cap weighted versus the equal. So if it's going down, that means equal weighted is outperforming the cap weighted. So again, that's none of that looks great right now. Let's go back and look at discretionary versus staples. You can see it's just been heading higher, just kind of going sideways right now. So that actually is a good thing. That's the one sector that actually is still performing pretty well. We'll look at breadth analysis right here. This shows you the advanced decline lines. So up here is the S&P 500. Let's see if we have that for the NASDAQ since no, we don't. So the S&P 500 right here, it's just kind of been going sideways. Advanced decline line is going up. That's good. NYSE, it's slightly going down, but heading up in the last couple of days. Large cap is not quite back at the high, but trying to get back there. Mid cap is trying to get back. So breadth actually is looking pretty good overall. And small caps are underperforming the rest of them, but it's trying to make a comeback there as well. So from a breadth perspective, those are actually looking pretty good. This is the intermarket that I was showing you before. This is the NASDAQ versus the S&P. You can see that it's underperforming the S&P. You want the NASDAQ to outperform. That's growth. Growth versus value here recently, the last month, heading down. It had a really nice run in December, and now in January, it's heading down. Consumer discretionary, as I mentioned, is going sideways. That's been the stronger one. This is mid caps and small caps. So you can get a sense for what the breadth looks like, the intermarket analysis. McClellan oscillators for the NASDAQ. This show you the moving average of the advanced decline. And actually it went up today. So that's good. It's actually trying to make a comeback here. It's moving higher. So again, the market is climbing that wall. It's trying to get back to the highs again. Sentiment, the VIX. There's the VIX way low. So VIX now is down below 16. That's positive as well. So just means that the market is not really too concerned looking out 30 days into the future, looking at options. It's very tame right now. The what else do we have? Price to earnings ratio. This is the PE down here, S&P PE, and you can see that normal is right down in this range down here, and it's very much above normal. It's over 30 right now for the overall S&P. And earnings are still moving higher. They're actually right back to the highs. They're a little above the highs from back here. So earnings are actually making new highs right now. Again, that's very positive. That's what really drives the market is earnings. Bull bear ratio. Usually when it gets up above this red line, that means there's extreme bullishness. And that's usually where we hit a peak in the market. You can see it happen. All these blue arrows is when the Association of Active Investment Managers are very bullish. That's usually when the market comes down. So it happened right here. And then we're trying to get back up again, trying to get back to that level. But the bullishness is declining. So they're becoming less and less bullish even as we hit new highs. 50-day and 200-day moving average. Here's the put call ratio. Usually when it's very low, that's very bullish. And usually if it's too low, that usually is where it reverses. But it's starting to get a little bit more bearish, which actually counterintuitively, it's a little, it actually might be healthy for it to get a little more bearish. Percentage of stocks below or above their 20-day moving average for the NASDAQ 100, 74% are above their 50-day, 59% are above, and above the 200-day, 61%. So as you can see, when it gets to the red line up here, that's overly bullish. That's usually where it reverses. But right now, we're right in the middle. 50-day is right in the middle. The 20-day is getting up there, but the 200-day is sort of right in the middle also. And the bullish percent index isn't really showing any alarms yet either. So the market still could have some room to run higher based on all of these indicators. And all of these are on the website. So that's it. You can get a quick view of the Magnificent Seven. You can see right here, short-term, medium-term, and long-term, whether they're bullish or bearish. I expect Apple to flip to a short-term bull tomorrow. We'll actually look at Apple here in a minute. And these are the sectors. You can see that energy just got a medium-term bullish signal, and industrials just flipped over too. So technology is the one that's really lagging right now. If these would start to flip, we could have almost a full screen of bullishness. But there's a few that are starting to lag. Usually it starts with the short term, but most of those are bullish right now. So that's all a good sign. Okay, let's take a look at the top of the screen. Let's look at the January barometer. So if you'll remember, we have three components. Santa rally was negative, minus 0.5. First 5 days was positive, 0.6. And now we're waiting for the full month of January, which ends tomorrow. So there's the high right there. It's actually going to be positive. I doubt it's going to make it all the way back down here. So the third component will end up positive. We just don't know how much yet. So we don't know if tomorrow it's going to make it back to the highs up here, or if this resistance right here is going to reject it and send it back down. But I think no matter what happens, I doubt that it's going to get all the way back down here to 58.80. 58.50 is the key level to be watching, but I don't think it's going to get back there. So looks like we're going to have a positive January barometer. All right, let's take a look at, by the way, what I clicked on the website, breakpointtrading.net. Right here is click here for current earnings calendar. So when you click on that, you get this view right here, and I'm going to look at NASDAQ 100. And this is for upcoming earnings. So you can see this is before the open right here, but let's see reported earnings and look at NASDAQ 100. So here's Apple. Apple, let's see what it's doing after hours. There it is, up 3%, up $7. Not huge, but not bad either. It was sitting right at the 50-day moving average. So this is probably going to push it above the 50-day, which it needs to do. So that might help the overall market, in fact, that at least it didn't tank, but didn't look like it's a huge win. Just out of curiosity, let's look at Tesla from yesterday. So Tesla was up after hours as well. Microsoft did terrible today, but it's up after hours. And Meta had a good report yesterday. It's actually down after hours, but none of those are moving very much. So that's good news. All right, let me close all these out. And I want to do something else for a subscriber who asked about, and it was on the YouTube channel, so everybody probably knows who it is. But we're going to look at FNA. So this person said that they bought some options, and when it took off, that's what you want with options. When it took off, it looked like he could bought them for 185, looked like he could sell them for 425, but when he actually executed, it was only 313. And that can happen when there's not enough liquidity in a particular stock. So this is Paragon 28. I have no idea what they do. It's a healthcare medical equipment company. Most likely they had a squeeze. So here's NVIDIA, by the way. Let's just touch on this real quick because NVIDIA is actually not looking good at all. NVIDIA is sitting right on the 200-day moving average on the weekly. It reached the 3X on the Keltner, which is usually where it bounces back. It should come back up to the 21-day up here at 134, but it's not. It's just kind of going sideways. But look at the weekly, sitting right on the 50-week moving average, and the 5 is actually an 8 on the week. The 8 is just about to cross over the 21. So that is not a very good look for NVIDIA. If we go back here and look at NVIDIA here, and we look at it on a weekly, and we'll go back. Let me go back. Let's go back 3.5 years. All right, so right here this is the 2022 bear market. It crossed over right here, so this right in through here would have been the time to get in. And you can see that it has never, through this whole period since 23, so 2 years now, it has never come back to where it is right now. And the 5, or the 8 rather, has never crossed over the 21. It's just getting ready to do that. The 8 is at 135.82. The 21 is at 132.68. So it's basically 3 points away from the 8 crossing the 21. That has not happened in 2 years. If that happens, if it breaks through that level right there, NVIDIA could easily get back down to $100 or $95. So anybody that would love to get back into it at 95, you might get your chance. You can see the red is getting ready to cross. This is a weekly chart. This is the daily chart. So it's sitting right on the 200-day moving average. The 21 has already crossed the 50 and still below it. It's below the cloud. Big volume, but even today, that looks like a hammer. And actually, there's 3 hammers in a row. You can see them, all 3 of them right there. So the market is trying to push it back up at the end of the day. It sells off, and then buyers come in. So there are lots of people out there that think that this is a good level, and they want to get in. And so when it sells off during the day, everybody piles in and buys some more. But you can see for 3 days in a row, it's had a lower high. And today actually had a lower low. So we'll have to see, and on lower volume as well. If it can't recover and get back up here, if it does drop through this 200-day right here, especially if it takes out the 115 level, which is where this low was, then NVIDIA is going to be in big trouble. So they're reporting at the end of February. They have a long way to go still before they report. So things don't look too good right now. It's trying to recover, and the buyers are trying to prop it up, but we'll see if they get overwhelmed or not. All right, so let's get back to FNA. So that was NVIDIA. So here's FNA. And I want to do this for a specific reason. So first of all, FNA right now, you can see, is at the 4X Keltner channel right there. This is the weekly over here. So it's it consolidated in through here, consolidated through here. You can see this long squeeze right through there. And then it broke out right up here. So because there's not enough liquidity, there weren't too many people that were willing to buy those options at that price. And let's take a look at what I mean. So I'm going to show you, bring up my my Thinkorswim platform. So there's FNA, and you can see right there, you can kind of see it down here. It was in a long squeeze right down here. It's actually a yellow. It went black to yellow to red to yellow to red to black. Long squeeze, and then finally fire to the upside. But let's take a look at what the options look like. So here's the options page, and you can see right now it's at $13. Now there's some important information that I don't have. This person said that they bought them at 185, but I don't know what the expiration date was. I'm going to make an assumption that it's February 21st. They didn't say what their strike price was. I am going to make an assumption that it was at $10 because this was probably down around up 10 or 11 at that time. But I don't know. I don't have that information. But the things to look for, first of all, let's see. On this particular February 21st, you see right over here on the right-hand side, and my little cursor thing's not working, so just follow the arrow. Right over here is the implied volatility, 64, almost 65%, or in other words, $1.67. What that means is the expected move, and right now we're at $13. So the expected move of this is $1.67, one way or the other. And this is something that trips up people that are trying to get into options sometimes, is they think that if it goes up, then they're going to make money. But the options are already priced expecting it to go up $1.67. So if it goes up $1.50, you could end up losing money because they were already priced for $1.67. So you need something that, the ideal thing is low volatility when you buy in, and then some catalyst that pushes it up very quickly. So you end up with high volatility that pushes it much above that expected move. Now you can see down here, if we went further out to March 21st, now the expected move is $2, almost $3. So in this case, you could go out here to March 21st, and we are sitting at $13 right now. So you could buy the 1250, which is right below 13, and you would well, it doesn't have the bid and the ask isn't open because the market's not open right now. But you can see that there's only one open interest. There's only one contract in March. So there's nobody to sell it to if you did buy it. Now, since it went up so much, we've now got 373. And again, I don't know what the point was where he bought it, but let's say it was at 10. Right now there are 72 open interest. Probably was much lower than that at the time. Could have been, below 10 even. You can see on the put side, it's only 1, 5, or 11. That's very low open interest. So that's why when you try to sell it, even though it looks like you could sell it for much more, there were no buyers there to buy it because the liquidity is so low. Now, one of the things that I am doing, which I've just completed today, is on the website, I now have a list on the options page. I have a list of stocks that have weekly options. Now, if a stock has weekly options, meaning they expire every week instead of every month, if they have weekly options, then practically by definition, they have high liquidity. These are usually pretty big companies. So you want to use the same kind of methodology and the same kind of scans, looking for something that's in a squeeze, something that potentially could move quite a bit. But if you do it with weekly options, then you know that there's plenty of liquidity already available. And if you click on this, you're going to get a CSV file, which you can download into your own platform, including stock charts or anything else that you're using. What I also have done is, and I haven't put this on the website yet, but I have created some scans right here for options. So in this particular case, let me close this one. I've got a couple of different flavors of the scans. I have some with the squeeze, daily squeeze, and a weekly squeeze, but I also created some using the candles like we talked about before. So this one right here, I'm going to show you because this can actually help you understand what where the market is too. When I ran this for bullish, I'll do it right now, and I don't think there's going to be anything. Well, there are two. All right, so on semi, actually there's the hammer right there, and you can also see it's way in the 3x Keltner channel as well. And then on the right hand side is the weekly. Here's UPS. UPS sold off, so they had earnings today and they missed. So there's a hammer on UPS. So let me show you what this looks like first. I'll close this down, click on Edit Scan, and I'll show you what I've done. Basically, on the bullish reversal, I'm looking for a downtrend. It is in a downtrend, and today's low is less than yesterday's daily minimum. So this means that it's hitting a 34-day low, 34 trading days. So basically about 2 months, a little less than 2 months. And the next one is I want either a bullish engulfing or a hammer. Now, both of those I showed you had hammers, but I'm looking for something that has either one of those. And those are bullish candles. So if they happen at the bottom of a downtrend, then potentially it could reverse and go back up. Now, the bearish one is the opposite. So the bearish one looks for an uptrend. Today's high is at the high for the last 34 days, and it's got a bearish engulfing or a shooting star, one or the other. So that's how I created this. So we'll take a look at the bearish reversal and see what we get. I think we'll get more. Oh, we only got two. So Domino's Pizza. So right there you can see that is a shooting star, clearly a shooting star. And it went right up and hit the 3x Keltner channel, and it's been moving sideways. It's just started a weekly squeeze right here. So this squeeze may fire to the downside. So this is one that you might be able to buy puts on. Doesn't look like this was earnings related. And then Pinterest is the other one. And in this case, it is a engulfing candle. You can see the engulfing candle right there. So this one actually might be a really good put or short. Made it up to almost to the 3x right there and reversed. And all the momentum is just starting to roll over right now. And then on the weekly, it's in a squeeze on the weekly chart as well. So this one, and it's below the 200 and the 50. So this one looks to me like it's going to fire to the downside, may already have started. So this might be a really good put candidate for options. So, and you usually won't get too many of these, but in that chart list, I'll show you the chart list here. I'll show you the chart list that I created that you can download and read into any other platform that you have. Weekly optional right here. So what you'll see is there are 432 stocks in this. The ones at the top are indexes. So you can buy and sell options on indexes as well. And these are all the names. So they're all pretty big names. You'll recognize a lot of them as you go through this. But that basically is what that list is all about, the stocks with weekly options. Also on the options page, there are some explanations like right here, time decay is really important. This is another thing. If you pick an expiration date that's too close in, then the time decay is going to decay your premiums much faster, which is another reason why when you try to sell, you're not going to make as much. The best thing John Carter always says, give yourself the gift of time and go further out. Even though they're more expensive, you have a better chance of actually succeeding if they're further out. The other thing to watch is on the delta, you want something that has a delta of above 60. So let's look at NVIDIA just out of curiosity. So here's NVIDIA, February 21st. You can see the delta right here. You don't get to 60 until you're up here at $120. And right now it's at 123. So that might be a good one to buy a call if you think it's going up. So it's at 123 right there. But you want a delta of 60 or higher, and the higher the better. That's just the chances of it actually paying out in the money. You can see right here with the February 21st date for NVIDIA, it has an expected move of $15 one way or the other. So sitting right about at 125 right now, that means it could go to 140 or it could go down to 110, either way. But if it goes to 140 and you think it was going to go to 140, you probably wouldn't make any money because that is already priced in to the stock, that expected move. It's already in there. So anyway, these are some things that on the website can help teach you. This is a great book, Mean Reversion Trading. I'm actually going to start doing some daily scans using this methodology, and I'll explain that when we get to it. But this explains all of this. And for cash settled index options, and I update this every day, you can see everything is pretty much bullish. But these, if you do trade these options, regardless of how long you hold them, you can hold them for 1 day. You get 60% of your profits is treated as long-term capital gains, while the remaining 40% is considered short-term. Does not matter how long you hold it. So that's kind of nice. So all these right here are cash settled index options. It won't work for SPY. SPY is not a cash settled option. It's an ETF. It won't work for QQQ. That is not a cash settled index option. That is an ETF. So it has to be cash settled in order to take that advantage, 60%. And that's automatically calculated, by the way, if you use something like TurboTax or something like that at the end of the year, and your trading platform automatically calculates that for you. You don't have to really worry about it. It automatically comes through. But that's kind of a nice little perk. Anyway, there's a lot of information here. Let me know what you think, especially those that would like to trade options. This is a great resource of where to start. Let me know if you want me to put the scans on here. I could do that too. I could put the scans, anybody that has stock charts and want to download the scans, I could put those on there for you too. All right, that was kind of long-winded tonight. Sorry about that. Hope everyone is doing well, and we'll keep an eye on the market. Right now, it's still bullish. Still looks like it wants to be bullish, but might be struggling near the top. So I think we're going to find out here in the next week or so whether it is in a distribution phase or not. If it breaks to the upside, it's not. If it breaks to the downside, then it is. All right, so that's it. Thanks everyone for watching, and I will talk to you tomorrow. Take care.